Welcome back. You're watching Market Cafe on 80 Now. Now let's get you some stock-specific news. Alpha Wave Global has agreed to pick up stake in UPL subsidiary Advanta for $350 million. Amit is here with more details on the stake sale. Amit, of course, the experts are viewing this as a re-rating move for UPL. Break down the shareholding pattern for Advanta for us post this deal.
Well, the bigger news that has come in for UPL is the fact that they will be selling their 8.93% stake in Advanta, which is one of the key subsidiaries of UPL, to Alpha Wave for around $250 million. Now, apart from this, Alpha Wave will also invest additional $100 million in the company, that is Advanta, for additional 3.51% stake, which means that Alpha Wave's entire shareholding in Advanta would be close to around 12.44% for around $350 million, which they are putting in. Now, this transaction values Advanta at close to $2.8 billion, and in this company, UPL's shareholding will come down to around 74.7%. KKR will own close to 12.86%, while the remaining 12.44% will be owned by Alpha Wave. Now, if you remember, back in October 2022, UPL had sold around 13.33% stake to KKR for close to $300 million. And if you compare that deal valuation with this deal valuation, obviously this deal valuation is done at a higher value. Back in October 2022, Advanta was valued at close to $2.25 million, $2.25 billion, while currently it is being valued at close to $2.8 billion. However, the valuation multiple that has come down. Earlier it was 26 times. This time it's around 23 times for Advanta. Now, Advanta generates around $120 million of annual EBITDA, which is nearly 15% of UPL's consolidated EBITDA, and this deal will help deleverage UPL's balance sheet. The debt currently stands at close to $3.3 billion, and this deal valuation is also done at a much higher valuation compared to what currently UPL is trading, which is close to around 8 times, which is the 12-month forward EV to EBITDA. However, on the negative side, this deal also means that the IPO plans of Advanta could now be pushed much further, because earlier, back in April 2024, there was news reports which suggested that the company is looking for an IPO of Advanta in early 2025, and the IPO was valued at close to $4 billion. So compared to that valuation, this transaction is done at a much cheaper discount of around $2.8 billion. So that is on the negative side coming in from this deal.
Well, absolutely, Soumik. But while you're with us, UPL has also announced plans to raise up to 3,378 crore rupees via a rights issue at 360 rupees per share. Can you please shed a little more light on this then?
Well, yes, a $400 million rights issue is what UPL has also announced. They had already taken a board approval, but they have announced now the opening of this rights issue. The rights issue has been priced at close to 360, which is at a discount of nearly 34% compared to the current market price. And the ratio is for every 8 shares held by any shareholder in UPL, they will get one rights issue share entitlement. Now, the record date for this rights issue is November 26, which means that the last day to apply or to buy UPL shares to be eligible for this rights issue is November 25th. Now, the rights issue will open on December 5th and will remain open till December 17th. Now, if one is eligible for this rights issue, then they will get the rights entitlement credited to their account on December 4th, and the trading for this rights entitlement will also start from December 5th, and the last day to sell this rights entitlement would be December 11th. Now, what is a rights entitlement? Rights entitlement is a temporary credit of shares. Investors can either choose to keep the RE and subscribe to the rights issue, or they can even choose to sell this rights entitlement in the market and give the entitlement to someone else to subscribe to the rights issue. Now, what can existing investors or old investors do in case they are holding shares of UPL? Now, assuming one has 8 shares, they will be entitled to one rights issue shares, and the estimated rights entitlement price is close to around 186 rupees, which means that the dividend per share for any investor could be around 23.25 per share, which is the highest ever announced by so far. UPL has never announced such a high dividend, so they should go ahead and sell this rights entitlement, given the fact that if they choose to keep the rights entitlement, there is too much of hassle. They need to keep a track of payment dates, and they also need to make payment for the rights issue amount, and if they fail to do that, then the rights issue will be forfeited to someone else. Now, what should new investors do in this rights issue case? There is no trading opportunity as such, given the fact that the entitlement ratio is not too much in favor, which means that you spend a lot more to buy UPL shares rather than compared to what you will get post selling the shares. One will in fact incur a loss if they buy fresh UPL shares at current price for arbitrage. However, there's a a possibility of gain only if the share prices of UPL fall up to the record date of the rights issue, and if the RE lists at a minimum premium of around 10 odd % compared to the estimated price currently that we have of around 186 rupees.
All right. Thanks very much, Amit, for explaining that mathematics also. Well, that's a news, but then surely looks like there could be some action, some movement in UPL basis this news. As experts, see, is a re-rating move for UPL.
If you like this video, then like, share and subscribe to ET Now.